A very good morning and warm welcome to the program. Welcome back from Smart Means Business, the morning edition of business here on Smart 24 TV. Now, welcome to Financial Market. My name is Anthony Sebale and I'm with
Dampi Jaglar.
And we are here to drive you through the financial market as they are right now, both regional and global markets. Remember, the show is proudly sponsored by Altex East Africa. Altex East Africa, my friend, is saying you can do something new. With Altex, you can now participate in the fixed income market by simply dialing *292#. Follow the prompt, you can register, you can learn more about their product, and you can be able, first of all, to buy and sell some of the fixed income securities that they have. That is in Uganda, in Kenya, and Tanzania. Altex East Africa is regulated by the Capital Markets Authority of Uganda, and they are licensed to do this kind of trade that they are doing. Altex markets open at 8 a.m. and close at 3 p.m. East African Standard Time. Altex is saying you can do something new. What do you have for us, Gloria?
Well, as of yesterday, it was quite an interesting day standing up from the Uganda Securities Exchange. And looking at our numbers that are in, there's a lot to unpack. So let's dive right into it, shall we?
Yeah.
So first up, we have a significant improvement in trading volume and turnover. Yeah. We have over 400% increase in volume and 5% increase in turnover from the previous trading day. Yeah. That's quite noteworthy.
Exactly. Looking at, especially yesterday, trading was quite slower. There were few investors really trading and few counters from yesterday's trade. But today we are seeing the numbers have improved with the participants going up to 3 and the top gainers as well on the local counters, which has improved the day's trading.
Exactly, and it was quite a bit of activity on the exchange because looking at these individual exchanges, well, we have the 2 gainers and 7 losers. So Stanbic Bank Uganda and MTN Uganda ended the game in green actually. And what caught my eye is the 0.85% gain from Stanbic Bank.
Yeah,
so
absolutely.
that's quite substantial.
Yeah, it's quite something we have been looking up to. Stanbic has given us a wonderful performance despite the current market conditions that have seen so many other stocks perform in a rather unexpectedly poor way. But yesterday, Stanbic really put up a very good fight with a gain of 0.85%, gaining up to 33.25 Ugandan shillings.
Exactly. And Stanbic also reported a 4.2% growth in its net loans and advances to around 4 trillion Ugandan shillings, while customer deposits actually rose by 1.1% to around 6.2 trillion Ugandan shillings.
Absolutely. I think this is one of the reasons investors are getting really into the stock, especially local investors. The company's profits have been improving. Stanbic Bank reported earlier this year an increase in loan advances, signaling growth in credit uptake by the private sector, which had been dampened by a slowdown in the economic growth. If you remember, during COVID-19, many businesses struggled to get credit. And after the COVID-19 pandemic, there has been a lot of efforts by businesses to see that they revamp some of their subsidiaries. And Stanbic has been one of those institutions that has really done great in terms of credit. Now, in details contained in the bank's half-year financial statements, Stanbic Bank also reported a significant increase in customer deposits base, thus supporting an increase in the interest income.
Exactly, and while presenting the results in Kampala, we have Ms. Anjuko, the Stanbic Bank Chief Executive Officer, say that there was a significant process across the financial and non-financial performance indicators during the half year to June, noting that the bank actually registered a 4.2% growth in its net loans and advances for around 4 trillion Ugandan shillings.
While customer deposits as well grew by over 1.1% to over 6.2 trillion. Stanbic Bank Uganda is currently Uganda's largest bank by total asset base, which in the period ended June 2023 rose from at least 9.3 trillion Ugandan shillings to a 9.4 trillion mark, while the earnings increased by 24.2%, and that was to a tune of 590 billion, buoyed by a 34.3% growth in the net interest income of about 355 billion, and an 11.6 billion% growth in the non-interest revenue of 235 billion.
Exactly, and when you look at its profits for the year, they actually increased by around 45.1 billion Ugandan shillings to around 263.4 billion Ugandan shillings from 218.3 billion Ugandan shillings. While its income tax expenses actually increased to 61.1 billion from around 56.2 billion Ugandan shillings.
Absolutely, and according to Mr. Ronald Makata, who is the company's chief finance officer, the company during the first half of the year ended 2023 had seen the bank's capital adequacy ratio improved to at least 23.9%, which is well above the industry average level, while non-performing loans dropped to 3.7% from 3.9%, which had increased due to the difficult economic environment in 2022.
Interesting, Anthony. And when you look at the group level, Mr. Makata said Stanbic Bank Holdings, which is the holding company of Stanbic Bank and Standing Properties, among others, registered a net profit of around 200 billion Ugandan shillings compared to the 162 billion Ugandan shillings, while comprehensive income rose to around 203.8 billion to 147.7 billion in 2022.
Interest expenses as well in the first half rose to a tune of about 30.7 billion, while shareholder equity increased to at least 1.8 trillion compared to 1.5 trillion in the same period in 2022. Mr. Makata also said that the board had, during the August 17th annual general meeting, approved payment of an interim dividend of 2.44 Ugandan shillings per share, totaling to about 125 billion, the highest in the bank's history.
Exactly. And now looking at MTN Uganda, it also saw a modest 0.25% increase.
Yeah.
Exactly. But on the losing side, we have Jubilee Holdings coming in, leading with around 0.16% share price depreciation. It's also interesting to see the dynamics actually in this market and how they're moving around.
Yeah.
So how do you think these stocks came up with this?
Well, there's been, especially for Stanbic and MTN, they are the two counters I could say that are holding up the stock exchange currently. Looking at the inactivity, especially on the cross listings like East African Breweries, KCB and the rest, these two firms have for the past 6 months dominated activity. And for Stanbic, like we have just given you the detailed look of their half-year performance in 2023. Investors have hope. You see, investors in Uganda really only based on, first of all, the dividend yield, and then secondly, they based on what they're hearing about the company. What is the company actually doing on the ground? And Stanbic has been able to at least put up a very, very good fight on that one. When we get to the yield, for example, for Stanbic, this year, their dividend was 2.54 shillings. Now, when you talk about the dividend yield, we are talking about the ratio of the current dividend, which is per share, divided by the current share price. When I do that simple math here on my calculator, I have 2.54 shillings, which was issued this year, divided by the current 33.25. And then I multiply that by 100. That's a 7.6% dividend yield, which I believe is competing with other markets like the Kenyan market, where yesterday we were looking at Cooperative Bank of Kenya with a yield of close to 11.7%, which is the highest in the land, right? So I think this is a very good competition amongst especially the retail banking institutions, and I have hope that if we maintain this performance and increase the local investor base, if more local investors get to invest in these stocks, we shall have even much better performances from such stocks.
Interesting, Anthony. And looking at the trading volumes, actually, Stanbic took the lead with around 600,000 shares. It was also followed by MTN Uganda, which had around 1,600 shares. So it's actually intriguing to see the distribution of the activity among these equities. Now, Anthony, could you give us an insight about its market indices as of yesterday?
Well, the market indices improved slightly. There's been an improvement, especially in the local company index. Thank God for the performance of MTN and Stanbic. The local company index increased by 0.32%. Remember, the local company index is the average performance tracker for the local stocks, which are 9 in number, and Airtel Uganda is going to be joining that list very soon on Friday after their IPO extension from 14th to 27th of October. But when you look at the current points on the local company index, we have 282.22 points on the local company index, making a 1-week gain of 0.9% and a 4-week gain of 1.48%. Local stocks are doing it quite big, and of course this has also influenced performance on the all share index, which is the average performance tracker for all the stocks that are listed on the exchange, and this went up by 0.58 points, closing at 936.24 points, which is the highest this week, and a 1-week gain of at least 0.86%, yet a 4-week loss of 1.16% is still being experienced by the all share index, which is quite interesting because the all share index in Uganda continues to be one of those not very good indicators of performance, because you have all these inactive stocks being considered. But to me, the local company index gives me a better picture of the market, and if it is improving, the markets are improving.
Interesting. And so in case someone asks me, like, what could be the factors that are contributing to this significant increase in the trading volume, what would you have to say about that?
I would say we are heading for the festive season, and investors are looking at how they're closing the year. When you're closing the year as an investor, you look back into your portfolio and try to make adjustments, positioning yourself for gains the next year. Now, for example, if you look at the big traders here today, and that was Stanbic Bank with 600,000 shares and MTN with 1,600, and then Bank of Baroda with 100 shares, which has been trading around the second, third position all this at least quarter that we are about to conclude. It shows you what investors are thinking. The investors are going to position themselves on companies that are promising gains, companies that are providing services to the public. You've seen Stanbic reporting loan advances, right? So if a company is giving out loans that are cheaper, if it's giving out credit and it has the biggest number of assets base compared to other competitors in the sector, then why not invest in it before the end of the year? And because by the next year, we are going to be now talking about a whole different story of new financial statements being issued, a whole new new year plan being laid out. You don't have enough time. So I think one of the things I could attribute this activity to is that we are heading towards the end of the year. We are in the final quarter. It's the final race for not only the investors, individual investors, but also the fund managers. Remember, fund managers in Uganda are some of the biggest investors. Institutional investment is a big thing in Uganda. So they're also trying to position themselves in such a way that they have their clients getting into the gaining positions. That could be one of the aspects that is leading to this activity. activity that we are seeing.
Exactly, and also looking into the recent developments from Stanbic Uganda. So any macroeconomic factors, or any industrial trends that this will improve on its performance also.
Yeah.
So, and when you look at the market segment based on yesterday's trading session, what do you have to say?
The market
Segment.
There's a lot. Bank of Baroda, for example, the bonus shares are still on, and the 15 Ugandan shillings mark hasn't been crossed in the recent few weeks. That gives you the kind of feeling that the bonus issue probably didn't go as planned for Bank of Baroda. But still, we are seeing that by next year, there will be enforcement of the new regulations by the Bank of Uganda, and that is for the minimum capital requirements of all commercial banks or Tier 4 commercial banking institutions coming to 150 billion from at least 25 billion. This is where we are seeing banks like Bank of Baroda trying to pull up their socks and raise capital through the stock market and be able to meet the minimum capital requirements. By next year, every banking institution will be required to have at least the total minimum capital requirements of about 150 billion. And that is exactly why we are setting the bar so high. But I think that besides that, sentiments of investors have also remained quite high as we expect more and more performances from the banking institutions and better performances also across the different East African capital markets like we're going to see in Kenya. I think that said, we shall take a quick breather, Gloria, right?
Exactly.
And we'll be right back. When we get back, we look into the Capital Markets Authority of Kenya, what is currently happening to the Kenyan shillings, and as well, we look at some of the top trending stories on the Nairobi Securities Exchange. Did you know that the dominance of big stocks in Kenya, that is on the Nairobi Securities Exchange, is hampering activity and actually reducing the number of local investors? My name is Anthony. I'm with Gloria. We'll be right back after this short break.
Smart 24, driving business.
Cooking oil like no other makes your meal so sweet and scrumptious. The taste of Uganda. The taste of Uganda.
Say goodbye to paperwork and travel costs. Now every MTN customer can register to invest in securities anytime and anywhere with Zabu in a few simple steps. Step 1. Dial *292#. Step 2. Select option 1. Register with Zabu. Step 3. Enter your full names. Step 4. Enter your national identification number. Step 5. Enter your national identification card number. In 24 hours, you will receive an SMS confirming your registration. Congratulations, you are now ready to invest.
My name is Aisha Naimi. I'm the director of the Solar Innovation Center. The Innovation Center is a clean technology innovation hub that promotes sustainable energy future in Dubai and beyond. And it's located at the heart of Mohammed bin Rashid Al Maktoum Solar Park, which is considered among the largest single-site solar park worldwide based on the IPP model. The Innovation Center is focusing on 3 key pillars. innovation, education, and inspiration. The education by empowering youth and building their capabilities in the field of clean and renewable energy. We are hosting professional training, providing workshops and trainings to empower the next generation of innovators in the field of renewable and clean energy. The inspiration by inspiring people and raising their awareness about sustainability and the green initiatives of DEWA that support Dubai transition toward the clean energy. So it's open to public to come and visit the Innovation Center and see the actual initiatives and the projects in real life. And we are focusing as well on the innovation by showcasing the latest technologies that are being adapted to the project of the solar park and DEWA in general, the renewable and green initiatives of DEWA.
Smart 24, driving business.
Welcome back, ladies and gentlemen, and thank you for tuning into Smart 24 TV, driving your business. This is Financial Markets. My name is Anthony, and I'm with Gloria Nampija, taking you through the market analysis for the different stock exchanges here in Africa and within East Africa. Starting off, we started with the Uganda Stock Exchange, and you've just heard from us about the top gainers and losers on the markets there and what we think the market is going to look like in the next couple of days. Now let's get to crossover, Gloria, to Nairobi. What do you have for us in Nairobi?
Absolutely, Anthony. The numbers were quite impressive from the NSE. We have a 20% improvement in volume, a 20% improvement in turnover, and a 48% increase in deals compared to the previous trading day. So this seems like a robust start of the week. So looking at our gainers, we have Everready East Africa that led the way with a 6.72% share price appreciation. So what do you think could have contributed to this significant gain from Everready East Africa?
Well, the company is one of the most affordable stocks in Kenya. It's on the growth enterprise market segment, and it's an active member in the manufacturing sector, and it's of course basically into the selling of dry cells, D-size batteries in East Africa. So few competitors in the space and a lot of activity on the ground. Like I said, still investors look at what you're doing in the market versus how you're performing on the exchange.
Exactly, and also strong financial results, maybe even strong positive market sentiment, and also maybe there are particular company news. So, and on the flip side, we have Nairobi Business Ventures on the bottom with around 9.09% share price depreciation. So what could have been the cause of this loss from this guys?
Well, the different stocks in Nairobi have a lot, depending on how investors are seeing, especially the cross listings. They have quite a number of business traders that are local and foreign, and so basically the Nairobi Business Ventures, for example, Scan Group, Britam Holdings, and Uganda'S are some of the companies that investors are most interested in on the foreign markets. But also the fact that Nairobi is segmented, it's a segmented market with both the growth enterprise and the main market segment as well for investors. So investors have options, and the more options you give them, the much better the trading activity.
Okay, and it will also be specific challenges coming in, maybe even poor earning reports from them. And we have Safaricom that also recorded the highest volume in traded shares with around 12 million Kenyan shillings. That's quite a substantial sign for them. So it actually suggests a substantial high level of interest in Safaricom from investors. as this is a major player in the telecommunications sector, higher trading volumes often indicate the increased market activity that can be a reflection for investor confidence in the company.
Yeah, Safaricom is a very great stock in Kenya, dominated mainly, the most dominated activity is by Safaricom in Kenya. It's the most valuable stock in Kenya as well, representing at least 37.5% of the entire equity market in Kenya. However, I'm disappointed in their recent performances. Much as they're still having the big volumes here, the market has kind of slightly declined. Because of their poor performance, since they are the dominant. You see, the problem, Gloria, when you are a dominant figure in the market, whatever happens to you happens to the whole market. And when we see Safaricom even lose a coin, but a 0.1 Kenyan shillings coin, you see the index moving in the same direction because they have traction. They have a lot of traction on the market, and anything good or bad that happens to them happens to Nairobi Securities Exchange. So I'm currently still kind of disappointed. After yesterday, they lost 0.15 Kenyan shillings down to 13.45 Kenyan shillings on the market. Their current market price is also representing a year-to-date loss of 43.7%. That's how much value they have shed off since the beginning of the year. Their year-on-year performance, exactly 1 year ago, they have also lost 46.7%. If you look at their yearly performance, and in 6 months, they have lost about 18.6% of value there. So I'm still quite disappointed in Safaricom, but I don't blame them because of the huge capital investment they had in Ethiopia. Due to that huge capital investment, there's a lot of decline in the profits, as of course they are mostly channeling their profits to their new subsidiary in Ethiopia, and that is driving the investors crazy as their dividend yield is also going low.
Exactly. Then looking at our all-share index on the NSE market, it showed that, an all-share index actually reflects the market's overall performance. What do you have for us from there?
The NSE all-share index declined by 0.59%, and that was 0.59 points, and that was to 92.58 points on the market, representing a one-week loss of 0.85%. And a 4-week loss of 4.49%, and an overall year-to-date loss of about 27.37%, indicating a subdued activity on the Nairobi Securities Exchange. But further analyzing the performance of the entire NSE, when you look at the stock trading on the Nairobi Securities Exchange, it has significantly declined as a result of big firms' dominance and a lack of new listings, and of course falling investor demand, according to the latest disclosures from the Central Bank of Kenya. Now, the report we are looking at is the Kenya Financial Capability Report that was released by the Central Bank of Kenya, indicating the performance of different sectors, indicating how there are different key performance indicators, and one of them being the capital markets. This report showed that the liquidity of company shares on the Kenyan bourse declined to 4.8% last year from 5.9% in 2021 and 6.4% in 2020. Imagine those two very serious declines there, reflecting a continued lower demand from investors, according to Central Bank's Financial Sector Stability Report dated September 2023.
Interesting, Anthony. And the insurance companies actually and banks accounted for the 31.4% in the market turnover in 2022, with Safaricom only accounting for 50% of the total equity turnover in this period. Yeah,
and according to the Central Bank of Kenya as well, the market concentration risk remains quite high at the Nairobi Securities Exchange, with the top 5 listed firms, accounting for an average of 72.7% of the total equity turnover in 2022 compared to 68.5% in 2021. And like you mentioned, the insurance companies and banks accounted for just 31.4%, and Safaricom alone accounted for more than 50% of the total equity turnover. I think you can get to see the picture I was shading for you. The fact that Safaricom's performance affects 50% of the market, and that is almost more than half out of the 66 listings, and this is not good for the market. It doesn't portray a very good picture when you have a dominating stock actually failing, which you can't avoid because there's no stock whatsoever that has remained up there forever. At some point you will fall, but what happens to the stock exchange when you fall? The primary market for equities also remained subdued in 2022 in Nairobi, with no new listings for shares through the IPOs, rights issues and share splits.
Exactly, and the capital markets actually remain under pressure as the bear run continues to run elevated at the marketplace. So more foreign investors continue to exit, and actually very few are buying shares, leading to the net capital outflow of around macro financial risk remain elevated.
Yep. And the capital markets, of course, face flight of safety by investors, characterized by excess volatility, reduced liquidity, and a high concentration risk. The foreign investors remained on the sell side, maintaining the sell side, contributing to a further decline in market activity way back in 2022 and into the first half of 2023. As well, the average foreign investor participation to the total equity turnover declined from an annual average of 57.1% in 2021 to an annual average of 43.1% in the first half of 2023, which I think to me, Gloria, is a win. The less activity and influence we have from foreign investors, the more we shall take hold. Even with the losses, if it is the local investors that are enduring the losses, it's better than foreign investors actually taking hold of the gains.
Exactly, and looking at the net sell-offs that continue to weigh in one exchange, causing a further volatility in the low appetite of the low equities market. So according to the CBK, multiple stocks actually locally and globally have delayed the recovery of the market on the purchase side.
Yes, and while investors deployed mainly hedging strategies to hedge against the risks that are coming in from the market, including single stocks and index futures, there to mitigate especially the market risks in 2022, the Nairobi Securities Exchange All-Share Index declined by 11.9% across December 2022. Compared to a year earlier, the NSE 20 index also fell by 23.4%, and the market capitalization generally fell by 23.4% in the same period.
By the end of June, we have the NASI had a further decline by 6%, while the NSE 20 share index and market capitalization had fallen by 16.1%, each from the December 2022 level. So the NSE therefore continues to experience bear market as global risk spillovers remain elevated.
Total equity turnover as well, Gloria, declined at least by 31.7%, and the total shares traded, that is the trading volumes, fell by at least 23.9% in 2022 compared to 2021, as investors kept off the market. And the market as well improved in terms of profitability. The profitability of the listed non-financial corporates increased by 6% to about 2022 in 2022 compared to the 2021 performance. Improved profitability is also reflected in the fewer number of listed firms that issued profit warnings in 2022. Only one listed firm issued a profit warning compared with 7 in 2021.
And in 2015, we had 18 companies that actually reported their annual profits falling by at least 25% from the previous year.
Yeah.
So looking at the fixed income segment was in 2022, some positive developments have been contributed to the listings of the Akon Holdings, which was around 1.22 billion Kenyan shillings, which is approximately to around $8.18 million bond. East African Breweries Limited is 5-year corporated bond worth Kenyan shillings 11 billion. And Kenya Mortgage Refinance Corporation with around 1.4 billion Kenyan shillings bond.
Yeah, well, the fixed income markets remain a little bit more resilient. However, there's still very little gains from the fixed incomes because of the fact that you have to hold them for a quite long time, especially the corporate bonds there. But the bear equity market, spilled over to the fixed income segment as well. That saw heavy undersubscription in the primary market. Remember, we have two private markets as well for the fixed income. For our viewers who might not know, we do have a primary market on the fixed income where you are buying bonds for the very first time, and then we have the secondary market where the people who bought on the primary market can be able to sell them to other traders on the secondary market. Now, this decline contributed to another decline in the trading of bonds in the secondary market as well, by 22.5% to at least 741.8 billion Kenyan shillings.
And a similar, actually, weak investor appetite for bonds in the secondary market was recorded in the primary market, where bonds offered were subscribed, actually oversubscribed in 2022.
Yeah.
So according to CBK, low demand rising interest rates actually pushed over the government's securities yield curve outward.
Absolutely, and that's exactly the analysis from the Nairobi Securities Exchange. Currently, we are still having a lot more to talk about the Nairobi Securities Exchange, and one of them being the cross-listed firms that were hit hard by a decline in the traded volumes. Now, East Africa's cross-listed firms have been hit in the regional markets as a result of a declining trade volumes in the poor liquidity of shares, signaling the rough ride that policymakers are facing in the integration of the regional capital markets.
Exactly. Another factor is hindering trading investor exposure risks in the region and trading in multiple currencies, and absence of harmonized regulatory framework and varying levels of development of regional stock markets.
Yeah.
So looking at this emerging, even if it's through companies making strategic decisions to the list of shares and jurisdictions away from the primary markets, investors are finding it difficult to trade in cross-listed shares since they are largely held by investors listed in primary markets.
Absolutely, and when you look at some of the Kenyan markets in the fixed incomes and the primary markets in the local stocks, there's been a little bit of a decline there in the traded volumes as well. It's also emerging though that even though companies make strategic decisions to list their shares in other jurisdictions away from their primary markets, investors are finding it difficult to trade in cross-listed shares since they are largely held by investors that are domiciled in the primary market. There are practical challenges that come with the expectation that cross-listed securities are going to experience having heavy trading as well, according to Mr. Shamia, who is the Chief Executive Officer of the Capital Markets Authority of Kenya.
Exactly, and if you are into trading, you must know that to trade shares, you must buy, and for you to buy, someone must provide those shares.
Yeah.
So if you have a market that does not have this stock of shares, then the market will not trade in those shares. So it's a challenge, and it still is, and of course, it would have been addressed by automation or maybe by our various registrars and the infrastructure, which allows people to buy from where they are.
Yeah, listed companies also, especially the cross-list shares with hopes of reducing the cost of capital raising. Because cross-listings, for example, if you have Umeme here in Uganda and they want to raise 800 billion, for example, like Airtel, they would rather cross-list and have maybe the 400 billion on Nairobi Securities Exchange just for them to increase their chances. This also helps to diversify their investor base, increase the share price, as well as improve the liquidity of their stock and improve visibility and shore up the market share for their products and services.
Interesting, Anthony. And then looking into our regional markets thing, so we have around 10 companies that have been cross-listed in their shares, like in the region. So we have KCB Group, we have National Media Group, we have East African Brewers Limited, we have Kenya Airways, Equity Group, Central Investments, Jubilee Holdings, Umeme Limited, and the Collapse Uchumi Supermarkets, and the Bank of Kigali.
Well, many East African listed stocks have not been keen to cross-list on the regional markets because of exchange rate risks. And this is one of the factors that hinders cross-listings, the fluctuation in our exchange rates. You find the Kenyan shillings today at 29, the next day it's at 32, Ugandan shillings, the next day it's at as low as 21. And of course, this affects investor participation. And of course, the low volumes in trading shares, especially on some of the cross listings. Like we're seeing in Uganda, same challenge that Kenya is facing. Cross-listed stocks, zero activity, and zero activity, no interest for investors to be able to actually buy, because there will be no liquidity if they do buy.
Exactly, and many East African companies that have not been keen to the press list on the regional markets because of the exchange risks and low volumes of trading in shares.
Yeah.
For instance, in 2016, we have Central Investments that plans to press list its shares on the Rwandan Stock Exchange and the Dar es Salaam Stock Exchange. So, citing lack of liquidity in its cross-listed shares in Uganda as a result of a difficult and lengthy segmental processes.
Absolutely, Gloria. And I don't know what we are going to do about this, but the cross-listed stocks really do a disservice, especially on Uganda Stock Exchange. Because I see we have cross-listed stocks like Umeme on Nairobi Securities Exchange. They do have activity, but there's nothing happening here on the Uganda Stock Exchange. And I think this is a challenge to the Capital Markets Authority of Uganda to ensure that there is activity on the local, rather cross-listed stocks in Uganda in order to promote the regional integration. The lack of activity also in cross-listed firms' shares has also been blamed largely on the failure of issuing companies themselves to increase their free float, and that is the shares available for trading, the incompatibility of the trading and settlement systems as well, and as well in the region, and of course lack of investor awareness among the East African Community partner states.
Interesting. And while several Kenyan companies have cross-listed their stocks on the Ugandan, Tanzanian and Rwandan markets, the Nairobi Stock Exchange has not benefited from these cross listings.
Yeah.
It's like looking at the second cross list in 2018, Rwandan's Bank of Kigali actually became the second firm in the region to cross list its shares on the NSE. So after Uganda's utility firm Umeme, which cross listed in 2012.
It is argued that the integrating of the Central Depository System, which is the CDS system, that is where people get accounts to be able to trade, the region's boys would hasten trade trade, Gloria, in cross-listed shares and also boost liquidity. The East African Community member states are working on a project to harmonize the electronics settlement systems of 4 stocks. That is the NSE, that is Nairobi Stock Exchange, the DSE, the Dar es Salaam Stock Exchange, the USE, Uganda Stock Exchange, and the Rwanda Stock Exchange. This is to ensure that the bloc's citizens buy and sell shares listed on those exchanges from their respective countries. I think, Gloria, this would help remove the hurdle of us having stockbrokers in Kenya dealing with those in Uganda and the whole foreign exchange process being settled as well. If we have a central depository system for all our 4 bourses, that is Nairobi, Rwanda, Kenya, and Tanzania, that would go a long way in actually removing most of these hurdles.
Exactly. Then looking at also Centerma's losses are tripled to around $51 million. What do you have for us from there?
When you look at Centum, there's been a lot of sell-offs and losses over recent years. And when you look at the performance of Centum PLC, it has suffered severe losses during the financial year ended March 31st. From continued poor performance of most of its portfolio investments and that of its key subsidiary, that is Two Rivers Development Limited.
Exactly, and having this regional investment firm which is listed on the Nairobi Securities Exchange and press listed on the Uganda'S Securities Exchange, it saw its net losses rise to around 7.31 billion Kenyan shillings from 2.28 billion Kenyan shillings in 2021 or 2022 after years of massive debt-funded capital investments.
Audited financial statements as well show that all the group's trading, investment and subsidiary operations save for the real estate investment posted either losses or reduced profits, and this was during the period ended 31st March, reducing the group's cash flow position by 11%. To at least 2.9 billion Kenyan shillings, or approximately 20.4 million US dollars, from 3.26 billion or 22.95 million US dollars.
Exactly, and our focus actually remains to take the critical decisions that are necessary to continue creating value and generating enhanced cash flow in the dynamic and challenging operating environment that we are in.
That was according to Mr. James Moria, who is the Chief Executive Officer of Centum Investments. I think we need to take a very quick break, Gloria, before we continue with the Nairobi. There is a lot more we have for you in stock for Nairobi Securities Exchange. More analysis coming in after this short break. My name is Anthony and I'm with Gloria. Stay with us. We'll be right back.
Smart 24, driving business.
UDC came on board in December 2020. When they joined us at a time when basically we are non-operational. We have machinery, that is say the cotton gins, we have a cotton mill plant, we have oil mill. The time UDC came on board, we are a bit challenged with working capital. So we had a facility, but we are really not operational. They have so far invested in us about 2.8 billion, and majorly this has gone towards working capital to revamp the production capacity. We had decided to do an overhaul since the machines had been not operational for about a year. We increased the capacity of the cotton plant from about 20,000 rolls of 500 grams a month to 80,000 at the moment, and we can even do more, just that we are trying to usually increase the production and increase the market, since we now have 5 partners on board. Basically, we are now fully operational. The cotton season usually starts from around August and ends in March of the new year. But those are basically 2 seasons. Cotton season is 4 months, so it's possible to actually plant twice and harvest twice and supply. Since UDC came on board, we resumed production, and it has certainly affected us as a company positively. There are positive benefits for us as a business. There is also the community benefiting from the investment. In terms of the community, we have done lots of farmer trainings. We have organized farmers in 2 groups, so we have an extension staff that teaches the farmers on best farming practices. Once they do well, it implies that even they will be bigger and better.
With getting cotton seedlings, we got them from Mutuma and we started planting. After 4 months, it had already germinated and sold it to the factory. The money we get is used to educate our children and daily running of life. After harvesting, we are paid in cash and solve our problems instantly.
We work along with certainly the other bodies that we cooperate with, CDO, that's the Cotton Government Organization, the UGCA, Uganda'S Cotton and Association, both export and local. By the time UDC intervened in 2020, that was down, partly because of basically cash flow challenges. What happens in the industry is that you buy cotton from the seeds as ginners. Then once you have separated the ginnery and the seeds, you sell all the lint, sell all the seeds, close the factory, and wait for the season. And what happened is that when we decided to add on the cotton wool plant, the opportunity was great, but it came with its challenges because it took time to develop the market and we consumed all the stock that we had. So that brought in cash flow challenges because if you can't sell, then you can't be sustainable. We have about 231 staff during on season, and during off season we have about 78 staff, of which 3/4 are from Soga region and there are locals within. And also organizing them into farmer groups has enabled them to access funding from other financial institutions. Ever since UDC came on board, we increased our production capacity. And I think right now we are in position to supply the whole requirement the government or the country needs, both private.
Hello tech lovers, obviously we are back with another tech bite, and this time around guys, technology is getting to a bigger and bigger level. We are going from one phantom to the other. Now this tech bite, I introduced to you what we call the smart glasses. Guys, things are getting out of innovation spaces. You need to be at watch. For example, Mark Zuckerberg has already proclaimed his aim to one day ship a pair of smart glasses that does both, but also still feels several generations away. Can you imagine, guys? Now, Meta has invested over 36 billion in research and development in the metaverse so far, to seemingly little benefit. Now, for comparison, Apple spent just over $150 million in research and development to invent the new iPhone. Can you imagine, ladies and gentlemen? Now, when we ask about whether the 36 billion could have been better spent on researching AI, a Meta spokesperson told Sky News that they spend money on AI and they have been working on AI for over a decade. So I think it's hard to quantify anything in that way. So following Meta's announcement of a new chatbot coming to its Messenger app, the spokesperson said they were confident they were keeping pace in the AI arms race against Microsoft and Google. I think we are just doing different things. That's what he mentioned, and he added that we are pretty comfortable with how we are progressing. Guys, alongside the Quest 3, Meta has also updated its Ray-Ban stories and smart glasses. Ladies and gentlemen, it's getting on fire with AI. These do not project images, but they simply capture them. Now, 2 tiny cameras will be built in the chassis of the pair of Ray-Ban sunglasses, which will record the world around you without you even having to take your phone out. Now, this is interesting. You don't have to take your phone out to record whatever you're recording. Are you live on Instagram? Use those smart glasses to record whatever you want to record. Now, these smart glasses, ladies and gentlemen, they do not project images, but they rather capture them. Now, as I mentioned, the last generation of smart glasses was not a roaring success, with one report published last month saying that 90% of customers stopped using theirs shortly after the purchase. So, Meta has come with a very verified version. Now, this will be improved cameras on the Ray-Ban glasses. Microphone chips will be built also on the Ray-Ban glasses. Built-in speakers won't only be just there, but they will also be operating for you to record thoroughly and efficiently. This will be enough to make anyone have an attractive proposition for content creators. Those who love to make content, this is an opportunity for you to get yourself the new smart glasses. Now, with the Instagram generation family in mind, the spectacles now only shoot in portrait mode without the option of landscape. As someone who works in traditional TV news, I found it a shame to lose the landscape feature, but the logic behind makes a lot of sense. Now, serial Instagrammers, serial TikTokers will appreciate the changes. Obviously, they will love these glasses, but whether the general public will or not remains to be seen. The built-in speakers situated in the glasses offered good quality music. Oh, ladies and gentlemen, Bluetooth music. Playback, of course, which also looks at the heavy tracks during your content creation. Now, to me, ladies and gentlemen, this is going to be a very good one for those who love to do content creation, those who love to do live Instagram videos, live TikTok videos. It's an opportunity for you to actually grab yourself the smart glasses. Now, in the world of technology, we bring you the smart glasses. Get yourself a pair and have yourself a very good tech week. Bye-bye.
Smart 24, driving business.
And we're here to drive you through the financial market analysis on the different stock exchanges. We are still in Kenya, right? And we've talked about the different performance indicators in Kenya, how, of course, the Kenyan market has been playing out for the past couple of months, and how the dominance of stocks such as the Safaricom stock has actually done more harm than good for the investors there in Kenya. But also, we've been looking at an insight into Centum Investments, which is one of the biggest firms in Kenya. That is an investment firm. They have a portfolio of different investments, and the subsidiary called Two Rivers Developments Limited, which have been performing not so well in the recent past. Now, when you look at the CEO, Mr. James Moria, continuing with some of his remarks on Centum Investments performance, he said that the firm posted a loss of 52.58 million Kenyan shillings on the disposal of investment properties from a profit of 111.07 million Kenyan shillings, while the losses from investment operations widened to 1.39 billion Kenyan shillings from 547 million Kenyan shillings.
Interesting, Anthony. And that also brings us to Centum Investment is financial services, generated and reduced profit of around 334.36 Kenyan shillings million from around 691.65 million Kenyan shillings. So while trading operations actually posted a loss of 119.02 million Kenyan shillings, from a profit of around 73.21 Kenyan shillings, actually million.
Yeah, yes. And the bulk of Centum's losses have mainly been blamed on Two Rivers Development, which is one of their subsidiary that is holding 58% stake. The Two Rivers Development Limited booked a loss of 7.09 billion Kenyan shillings, approximately 49.92 million US dollars, from at least 2.28 billion Kenyan shillings as a result of the declining sales and also investment incomes, increased funding costs and increased losses from the joint venture investments.
Exactly, and the TRDL's losses were compounded by massive 3.87 billion Kenyan shillings. This is an impairment of provisions.
Yeah.
So Centum invested actually around 1.9 billion Kenyan shillings into this project for a 58% controlling stake. The remaining shares are owned by the Aviation Industry Corporation of China, actually 39% of it, and the ICDC with 3% stake.
Centum's real estate investments, however, posted an increased profit after posting a profit of 2.01 billion Kenyan shillings during a period from at least 127 million Kenyan shillings in the previous year. So far, the debt has reduced to as low as 2.2 billion Kenyan shillings from 16 billion Kenyan shillings in 2019. And Centum has written off some of its investments, such as the 2 billion Kenyan shillings investment in the controversial Lamu-based coal-fired power plant. It also suffered a loss of 900 million Kenyan shillings impairment loss on its investment in Akira geothermal power project, which was a 140 megawatt power project construction in Kenya's Nakuru County.
Exactly, and the company's board also approved a share buyback plan to purchase up to 10% of its issued and paid up share capital to shore up its share value or at the stock market.
Centum invested as well 1.97 billion Kenyan shillings in Akira power plant for a 37.5% stake in 2016, but in carrying the value of the investment declined to at least 1.07 billion Kenyan shillings as of 30th September 2022. And in the same year, Centum Investments also had 2.0 billion in Amu Power Project, a joint venture between the Gulf Power developer and co-sponsor, as well as Centum co-sponsor, for a 50% shareholding.
Anthony, and the Amu Power was designed to develop the 1,050 megawatt coal power in Lamu.
Yeah.
So in January this year, 2023, Centum failed to sell off its banking subsidiary, CDN Bank, to Nigeria, Access Bank PLC, after the Western African banking giant pulled out of the deal.
Centum had opted actually to sell its entire stake in this bank, that is the CDN Bank, and this was an 83.4% stake that Centum had in CDN Bank, formerly known as the Care Rep Bank. But after the third tier lender failed to generate returns or dividends for the last 7 years, from 2014 to 2021.
Exactly, and if the deal was successful, actually, Centum could have sold the bank at a loss of around 4
Wow, imagine.
This actually corresponds to around $2.81 million. $1 million.
Yeah.
So considering the original investment in the bank was actually valued at around 4.7 billion Kenyan shillings, corresponding to around $33.09 million. In 2014, actually, the market value had fallen to around 2.7 Kenyan shillings, billions actually, and this corresponds to around $19.01 million by September 2021.
Well, yes, that's it from Centum Investments. And Centum Investments continues to suffer deep losses and sinks deeper in the red with a 10 million half-year loss as well. A very, very big woes there for Centum. According to CEO Mr. James Moria, who says that rising interest rates have led to an increase in the borrowing costs for the company and slower economic activity that have in turn resulted in very much reduction in the turnover of the group's portfolio companies. Centum Investments is also contending with losses after years of massive capital investments, and mounting debt took a heavy toll on its finances, dimming earning prospects from shareholders.
How so, Anthony? Could you give us more insights on that?
Yeah, the group also made losses of up to 1.29 billion Kenyan shillings, approximately 10.57 million US dollars in the last 6 months to September 30th, 2022, one of their biggest losses as well. In the same period last year, comparing with the same period, they had about a loss of 662 million Kenyan shillings. All of the group's trading, investment, and subsidiary operations, save for the financial services, have made losses.
Interesting. Thank you for those insights, Anthony. Now, crossing over to the Rwandan Stock Exchange and eyeing the implementation of its unified electronic settlement system for the regional bourses to bolster its trading on the cross-listed equities and shares. What do you have for that?
Yeah, Rwanda Stock Exchange has been looking at integrating with the rest of the African markets here, and this hasn't been hasn't seen success yet. However, the Rwanda Stock Exchange has been making efforts in line with the regional integration here on the East African market, and eyeing the different opportunities across East Africa, in Uganda, in Kenya, and in Tanzania. The Rwanda Stock Exchange is looking at implementing a unified electronic settlement system for the regional bourses in order to bolster trading on its cross-listed shares.
And the market wants to boost trading on these inactive cross-listed stocks on its platform. So trading of these stocks is low during the tedious process of buying and selling them. So we have the RSE Chief Executive Rambuka Celestin told the East African and the implementation of the regional capital markets infrastructure project will ease the trading loss of these cross-listed shares.
Absolutely. Mr. Celestin also added that they have already worked on their own automation, and it is very, very simple. It is part of the CMI, which is a system that will be plunged into the CMI and be part and parcel of the infrastructure, according to Mr. Celestin.
And they are able to trade with Tanzania and all Uganda and all other countries if the companies are cross-listed. So we have actually done a soft launch to see if the system is working live. And so when the CMI is fully developed, they will just go live.
The CMI is awaiting official launch by the East African Community, and that is the East African Community Secretariat. Links the trade platform that is in Uganda, in Kenya and Tanzania, as well as Rwanda, will be enabling them to operate a single market. Burundi also still has its part to play here when we talk about this particular one, and it still has functional securities exchange, while Kenya pulled out of the project due to concerns over the procurement of the software.
And this system will also allow investors to buy and sell shares of companies located in different East African countries without necessarily moving from one country to another. So 4 Kenyan firms are cross-listed on the Rwandan exchange, including KCB, National Media Group, Equity Bank, and the Uchumi Supermarkets.
A South African healthcare-focused investment firm, RH Bopelo Limited, has well, whose primary listing is on the Johannesburg Stock Exchange, is also cross-listed on the Rwanda Stock Exchange.
Yeah, and while these cross-listing, actually the cross-listed shares improve a firm's visibility and enlarges its investor base, no law or trading encounters has left the companies hesitant to issue shares in the new markets.
Lack of activity on the cross-listed firms' shares has also been blamed largely on the failure by the issuing companies themselves to be able to increase their free float, that is, shares available for trading, and the incompatibility of the trading and settlement systems within the region, which I believe, Gloria, needs to be tackled. If you look at the people we want to actually be like the New York Stock Exchange, when you look at China Stock Exchange and the DAX on the German Stock Exchange, they have done a lot of integration and harmonization, especially amongst the different stock exchanges. And one of the things that eases access to the markets is the harmonization between settlement systems and the central depository system. So our capital markets authorities across East Africa need to tackle the issue of integrating our systems. And like you had Kenya pulling out over concerns of procurement of the software because they don't believe in the system. And that is exactly going to put us back, because without Kenya, I'm telling you, Gloria, the East African community capital markets are nowhere.
Exactly.
They are nowhere.
Other problems to trading of these cross-listed stocks include the lack of investor awareness, exchange risk rates, and also different trading regulations among the East African community pattern states.
Listed companies in East Africa have also not been keen on cross-listing on the regional market because of exchange rate risks and low volumes of trade in shares since 2016. In 2016, for example, Kenya's firm, Centum Investment, shelved plans to cross-list its shares on the Rwanda Stock Exchange as well as the Dar es Salaam Stock Exchange, citing lack of liquidity in its cross-listed shares in Uganda.
Exactly, and now looking at the Kenyan shillings, whereby its inflation has remained stubbornly high at an annual rate of around 6.8% in September, with food and fuel prices still on the rise. So whereas Kenyan shillings sank to a new low of around 150 to the dollar on Monday, adding to the woes of people already battered by the high inflation and the raft of the new taxes.
The shilling has been in decline for several years and plunged by almost 24% over the past 1 year under pressure from the high debt levels and the depleted government revenues.
And according to Central Bank of Kenya's data, the dollar was selling at just over 150 shillings. So although some commercial banks and foreign exchanges actually have been trading at it at a level of higher in the recent weeks.
Well, according to Mr. Ken Gichinga, who is the chief economist at Mentoria Economics, he told the AFP that the exchange rate reflected the strengthening of the dollar during the Middle East crisis, which is pushing investors to safe haven assets as well as the high U.S. Treasury yields.
Exactly, and Kenya also accumulated more than 10.1 trillion shillings. This is approximate to around $67 billion in debt by the end of June. So according to the treasury figures, and equivalent to around 2/3 of the gross domestic product.
The cost of servicing the debt, mainly to China, has also soared as Kenya's currency has slumped, and the government has also had about $2 billion US dollar Eurobond falling due in June next year, which is putting a lot of pressure on the forex reserves.
Exactly, and having President William Ruto earlier this year that actually introduced a range of new and increased taxes to help the government coffers, despite the pledging during last year's election campaign to ease the financial hardship of the original Kenyans.
Absolutely, Gloria. Economic growth slowed down last year in Kenya to 4.8% from 7.6% in the year 2021, buffeted by the global fallout from Russia's invasion of Ukraine and a devastating regional drought that hit Kenya's vital agriculture sector. And inflation has remained stubbornly high in Kenya at an annual rate of 6.8% in September, with the food and fuel prices still on the rise in Kenya.
Exactly. Now, rushing back to our stock exchange on the Nairobi Securities Exchange, where we see the year-to-date losses that indicate the overall market performance over the year, with various factors that include economic conditions, regulatory changes, or sector-specific challenges, which contributed to its loss. We need to dive factor actually in the sector and specific data to identify what industries might be facing headwinds.
Well, there's a lot to look out for in Nairobi, but like we've mentioned earlier in our market analysis, one of the factors that's going to be very critical to the success or the failure of the NSE is going to be, first of all, the local investor base. Secondly, the Kenyan shilling's resilience, and that is going to come from the government's efforts in boosting the export industry to see that Kenya exports more than they import, and also boost the forex reserves. But also, number one and primarily, what we are looking at is the increase in the new listings. We have had a drought of IPOs in Kenya for the past 3 years. We haven't seen any new listing, which is worrying for the Kenyan Stock Exchange. But some problem for Uganda. However, in Uganda, we are welcoming Airtel Uganda, Gloria, and on Friday, Friday, finally, we are going to have the close of the Airtel initial public offering. Airtel pushed their IPO from 14th to the 27th of October, eyeing the fact that there was an influx of investors towards the deadline. Many investors wanted to get in and try to buy shares at the last minute. Like Ugandans always want to do things at the last minute. I don't know why, Gloria, but we always want to do things at the last minute. But it's good news coming in from Uganda Stock Exchange. This Friday, we shall be having that IPO close, and very soon in November, around the 6th of November, Airtel Uganda is finally going to join the 9 local listings on the Uganda Securities Exchange. Hopefully, we shall be having as well a cross listing of Airtel, for example, Nairobi, Dar es Salaam. That would also boost activity. What would you think about that?
It will actually boost our trading activity and our visibility, and also attract investor knowledge there.
Absolutely. And that's it from us today. We are going to have another very insightful program where we got to interview the MitroPlus Labs on the innovations in the blockchain technology, right, Gloria?
Exactly.
Yeah, and that is something you're going to be looking up to for the next 1 hour. We are taking a very short break. Don't touch your dial. Stay with us. This is Smart 24 TV, and we drive your business.